Good day, welcome back to this channel. Today we want to look at basis period under taxation. So, basis period is the period upon which the tax liability of a business entity are being assessed to tax. It is the period upon which the tax liability of a business firm will be computed and assessed and subjected to tax in the hand of the tax payer. Under this basis period, we have what we call the year of assessment. The year of assessment. The year of assessment is the year upon which the operating result of the business firm will be assessed to tax. The basis period is about the period within that year of assessment, while the year of assessment is the very year that the business will be subjected to tax. So actually we have two types of basis period. We have the preceding year types of basis period. We have the preceding period, PYP, and we also have the actual year basis period, AYB. The first one, the preceding year basis period, is a type of basis period upon which the tax liability the tax liability of the business firm will be computed in the year after the business has ended its operation. It is a type of basis period in which the operating result of the business firm will be subjected to tax a year after the business has ended its operation. What I'm trying to say in essence is that assuming the business started in 1st July 2006, assuming the business started its operation in 1st July 2006, and when you come to the next 12 months, it's going to give you 31st 6 2007. If you count from year to year, it's going to give you 12 months. So assuming the business started here and make up its account here, what the basis period is trying to say is that the year of assessment is going to be, the year of assessment is going to be on 2008. So for you to have a correct basis period under preceding year basis period, the basis period must have ended before the beginning of government tax year, because the year of assessment run based on government tax year, or what is called government fiscal year. So for the second year now, the basis period is going to start a day after the ending of this June, which is going to be still 1st July 2007. The next 12 months will still be 31st June 2008. And the year of assessment, because the business make up its account in year 2008, the year of assessment now is going to be on 2009. On third year now, business ended here. The business operation will start a day after the business has ended its previous operation. So it will still start from 1st July 2008 to 31st June 2009. And then because the business ended here, the year of assessment will be 2010. That's what preceding year basis is trying to explain. That the year that the business ended its operation will be different from the year that the business will be subjected to tax. And the businesses that are usually subjected to tax using preceding year basis are mostly the sole traders, partnership businesses, and companies. They are always be computed using preceding year basis. But when you come over to the actual year basis is trying to explain that the operating result of the business firm will be assessed to tax by the taxpayer on the same year that the business carried out its business operation. So, using the same example, under actual year basis is trying to say, using the same example, the year of assessment basis period will be, assuming the business started on 1st July, like this one, 1st July 2006, and make up its account on 31st June 2007. The actual year basis period is trying to say that the year that the business make up its account will still be the same year that the business will be subjected to tax. So the year of assessment is going to be still 2007. Next year, the business ended year, it will begin a day after this month, which will still be 1st July 2007 till 31st June 2008. And the year of assessment will be on 2008. This is how it will continue. On third year, it will still be 1st July 2008 till 31st June 2009. And the year of assessment will still be 2009. So, under actual year basis, the year that the business will make up its account will be the same with the government tax year. It will be the same with the year of assessment, unlike the preceding year basis, whereby the year that the business make up its account or close the account will be different from the year of assessment. And most businesses that usually tax using actual year basis are, when I'm talking about taxation of employee, they are usually computed using actual year basis. And also when you talk about the taxation of petroleum income tax and capital gain tax. These are the businesses that are usually being assessed to tax using the actual year basis. There is also another two forms of basis periods, but basically we have two types of basis period: actual year and preceding year and actual year. But we also have what they call we have normal basis period, and abnormal basis period. Normal basis period is trying to explain that the business must be in operation, that the basis period must not be less than or more than 12 months. The rule under normal basis period, or the features of normal basis period, is that the basis period must not be less than or more than 12 month calendar. It must not be less than or more than 12 months. It must be 12 months. That's one of the features of normal basis period. Number two features of normal basis period is that the basis period must start a day after the ending of the previous accounting date or previous accounting period. It must start a day after the business make up its previous accounting period. Assuming, for instance, like in this place, the business make up its account on 31st June 2007. Under normal basis period, the business supposed to start on 1st July, which is a day after the month that the business ended its previous accounting period. So that is the number 2 features, that the basis period must start a day after the business ended its previous accounting period. That is number 2 feature. Number 3 feature under normal basis period is that the business must have one permanent year end. The business must have one permanent year end. That is to say, if a business is usually close up its account on 31st, just like in this place, the business always close up its account on 31st June 2007. The normal basis period is trying to say that it must continue to close the account under the same date. You can see that all of them ended in 31st June. So under normal basis period, the basis period must have a permanent year end. It's not that if they close the account this year on 31st June, next year they will close it on 31st July. It must have one permanent year end. So these are the 3 features of normal basis period. While abnormal basis period is just the opposite of the normal. And what are their features? One is that the basis period may not be up to 12 months. It can be more than 12 months or less than 12 calendar months. And when such occasion occurs, we say that there is an abnormal basis period. Number 2 features is that the business may not commence operation a day after they close their previous accounting date. It can commence at any time. The last one is that under abnormal basis period, it may not have a permanent year end. It may not have a permanent year end as in the case of normal basis period. And under this abnormal basis period are usually experienced when there is change of accounting date. When there is a change of accounting date, that is when we usually have this abnormal basis period. Another one is when there is a commencement of a business. During commencement of a business. And number 3, when we talk about abnormal basis period, is when we talk of So abnormal basis period are usually experienced, as I said, during change of accounting date, during commencement, and thirdly during cessation of a business. That's only occasions whereby you will experience abnormal basis period. This is the end of this video. In our previous video, we are going to take time to explain in full with a practice example how to calculate basis periods under this following heading. So in our next video, we are going to look at change of accounting date, commencement, and cessation. Until we meet again in another video, this is bye for now.